5 easy steps how to earn $500 per week with only one Bitcoin trade. I'm full-time institutional OTC crypto trader, and in last month my public portfolio reached a profitability of 65% of annual return by using this simple strategy. This is one of most important videos that you need to watch to create passive income and stop losing trades. So let's go. This is a huge advantage that only 5% of all crypto traders are using. And you can belong to this 5% because this strategy allows you to buy Bitcoin below the current market price. And after that, sell Bitcoin at the higher price and make profit. And for this, you get a passive income of $500 per week or even more. And how can I do this? For that, I will use put option. And don't be scared, because options are very simple and very profitable. And later in this video I will show you all my trades, and you will see that this strategy is very simple and very profitable. But before I show you all the trades, we have to take a look at the all 5 steps. And I begin with the first one, selection of the asset. So by following this strategy, you decide which asset or cryptocurrency you would like to own in the long term. That could be Bitcoin, Ethereum, XRP, or Solana. And a bit later in this video I will show you all advantages and also disadvantages for each cryptocurrency by using this strategy, and why I choose trade Ethereum for my public portfolio. And by the way, this portfolio reached in last 30 days the annual return of 65%. And all the trades you can find in this video. So don't miss this video. But the main idea of the first step, you have to choose the cryptocurrency which you would like to own. And after I choose the cryptocurrency that I would like to buy, I am ready to go to the second step and buy this cryptocurrency at the lower price. To buy cryptocurrency at the lower price, and for that receive a premium that will be at the end my profit, I have to sell put option. I have a full step-by-step guide video how to sell put option and receive a profit, but I will take Bitcoin and explain how this strategy works. So as you can see from the chart, the price of a Bitcoin is equal to $88,000 right at the moment. So let's say the current market price of Bitcoin is too high for me and I don't want to buy Bitcoin at this price level. By selling a put option, I can choose my target price, and let's say I'm ready to buy Bitcoin at the price of $82,000. Okay, so this price target seems attractive to me, and for my readiness to buy Bitcoin for that price, I receive upfront a premium, which is at the end my profit. For example, if I'm ready to buy Bitcoin at the price of $82,000, after 9 days, I will receive upfront a premium of $530 for one Bitcoin. And for example, if I'm ready to buy Bitcoin at a slightly higher price, so let's say at the price of $84,000, in this case I will receive even higher premium, and this premium will be equal to $840. And as you can see, the target price of $84,000 is 5% lower than the current market price of $88,500. So that means for my readiness to buy Bitcoin at a lower price, I receive a very high profit, which is equal to almost 1% per week. So if I divide this premium, which is equal to $840, this is the premium that I'm going to receive upfront in the case I sell put option, with a target price of $84,000, the profitability is equal to 1% per week. And this is more than 50% of annual return. And I get so much money for only the fact that I'm ready to buy Bitcoin at the lower price. And a bit later I will show exactly how I choose the target price for my public portfolio, because exactly this strategy I follow to reach a profitability of 65% of annual return. And step number 3 is to sell as much put options as I can and receive all these premiums. And a bit later I will show you my real example from my public portfolio, where I was able to sell for 45 days the put options and receive the premium each time. So this is I will show you a bit later, but let's come back to the Bitcoin example. So and that means after I sold the put option with a strike price of, let's say, $84,000, and the price of Bitcoin at the expiry date will be higher than the strike price, so let's say it will be equal to $86,000. So, and as you can see, this is higher than my strike price of $84,000. In this case, the option will expire worthless, and I don't buy Bitcoin at my target price. So, and that means after the option expires worthless, I can sell another option and receive the premium once again. And my goal is to sell put options and receive the premium each week. So that's why I have to choose a strike price which is not too close to the current market price, but still not far away from the market price, because in this case I will not receive a high premium. So that's why I have to find this best strike price. And there is a parameter which is called delta, which can help me a lot. And a bit later I will show you how I use this delta to choose the appropriate strike price for my public portfolio. And for the last 45 days it was really successful and I was able to earn really high profitability. So this I will show you a bit later. So let's come back to the Bitcoin one more time. And let's say 5 weeks in a row I was selling these put options, and every week I collected all these premiums, which massively increased my balance. And as soon Bitcoin hit my target price, nothing bad is going to happen, because I was ready to buy Bitcoin at that price. And here we go, here is the step number 4, when I have to buy Bitcoin. And let's say that this time the price of Bitcoin at the expiration date will be lower than the strike price, which is equal to my target price at which I am ready to buy Bitcoin. So this is not bad, because I was ready to buy Bitcoin at that price. And now the best part. My average price will be not equal to $84,000. So in the reality, my average price will be even lower than $84,000. Because for my readiness, as you can remember, I received the premium, which was equal to $800. And that means that my average price will be lower than the strike price and will be equal to $83,200, which is $800 lower than my strike price. And this is not the end. If I take all the premiums that I collected in the last 5 weeks, my average price could be even lower than $80,000. So that means all the premiums that I receive will reduce my average price. And that's why it's really important to sell as much put options as I can to collect this premium, which is at the end my margin of safety. And after I bought my Bitcoin at a very low average price, here is the last step. I have to sell my Bitcoin at the higher price. And also for that I will receive a premium. So let's take a look now. And now let's assume that expiry just happened. And let's say I am ready to sell Bitcoin that I just bought from the previous step at the higher price, at the price of $92,000, which is roughly 4% higher than the current market price. And to sell Bitcoin at the higher price, I have to sell call option. And by the way, I have a full step-by-step guide where I show also a real example how execute this trade and receive the premium. So I definitely recommend to watch this video if you would like to use this strategy and get profit. And for my readiness to sell Bitcoin at a higher price and realize the profit from the price increase in the Bitcoin, I will receive a premium, which is also very high and equal to almost $970. And this is also more than 1% return per week. And this is my favorite part, because if the price of Bitcoin after 9 days will be higher than $92,000, I will sell the Bitcoin at the price of $92,000 and I will realize the profit of almost $4,000 from only price increase in a Bitcoin, which will be equal to roughly 4% of profit just in 1 week. So, and this is great. And also in addition to that, I receive an option premium, which is almost equal to $970 on top. And that means this part is even more attractive, because I can profit from the price increase of Bitcoin and realize a profit. And no matter what, I receive almost $1,000 in premium that at the end will belong to me anyway. So this is my guaranteed profit that I will receive. And in the case the price of Bitcoin at the expiry date will be lower than $92,000, the option will expire worthless. So I will be not able to sell Bitcoin at the price of $92,000. In this case, I can sell another call option and receive the premium one more time. And I will keep selling all the call options and receive the premium every week. Also, if I would like to do only one trade per month, I can also select the option which has expiry date after 30 days and select the price which is attractive for me. For example, let's take a price of $95,000. In this case, if the price of Bitcoin at the expiry date, so after 30 days, will be equal to $95,000 or more, I will sell Bitcoin at the price of $95,000, which is equal to my target price or strike price. In this case, I will realize a profit of 7.5% only from the price increase in Bitcoin. And also in addition to that, I will receive upfront an option premium, which is equal to $2,100. And this is a massive amount, which is my passive income. And in this case, I have to do only one trade per month to receive $2,000, which at the end, no matter what, will belong to me, because I receive this premium upfront. And let's say that the price of Bitcoin after 30 days at the expiry date will be equal to $96,000. So I sold a call option with a strike price of $95,000. So that means I will sell my Bitcoin at the price of $95,000. But my average price will be even higher, because as you can remember, I received a premium of $2,000. So that means my average price will be equal to $97,000, which in this case will be even higher than the market price at the expiry date. And after I sold my Bitcoin at the price of $97,000, I can go to the step number 1 and repeat all the steps one more time and receive these premiums every week again and again, which is at the end my passive income. And now let's take a look at my public portfolio and also real example how I use this strategy. And let's begin from the step number 1. I have to choose the cryptocurrency that I'm going to trade. My public portfolio at the beginning was equal to $2,000. So that means I was not able to trade Bitcoin. To follow the strategy in the right way, I have to have on my balance the cash amount which is equal to at least 0.1 Bitcoin. So that means more than $8,000. Since my public portfolio has only $2,000 on my account balance, I was not able to follow this strategy and trade Bitcoin. To follow the same strategy, for example, with Solana and buy Solana at the price of $110 per Solana, after 40 days, I need to have a cash balance of $1,100. Because one put option is equal to 10 Solana. For example, to buy XRP at the price of $2 per XRP, I have to have the cash amount for 1000 XRP. So that means $2,000 in this case. and for that I could receive a premium of $75. But Solana and XRP are too volatile for me. So that's why I choose Ethereum and use exactly the same strategy that I just explained to you. And now let's go to the second step, where I'm ready to buy Ethereum, and for my readiness I received the premium. And here you can see all the transaction history that I have for my public portfolio. And as you can see, I sell options every day. So I prefer to sell daily options, which expires every day. And every day I receive my premium. And as I said in the beginning of this video, I will share with you how exactly do I choose the strike price, or the target price at which I'm ready to buy Ethereum. There are two important parameters that I consider before I sell put options. So first of all, definitely I take a look at the chart and find the support level. So this is very important. All support levels give me a very good overview which strike price could be very interesting for me. And after that, in addition to that, I am looking at the delta. I prefer to sell put options with a delta of 0.20 and less. So it depends how defensive I would like to be. If I would like to be more aggressive, I can sell a put option with a delta which is very close to 0.20. In this case, for example, this is 0.18, and the strike price or my target price at which I would be ready to buy Ethereum is equal to $1,900. And this is 8% lower than the current market price. And time to expire in this case is equal also to 9 days. If I would like to be more defensive, I am looking at a delta of 0.10. For example, in this case, this will be a delta of 0.09. And the strike price will be equal to $1,800. If I would like to be very defensive, I will look at the delta of 0.05 or even less. In this case, this could be a delta of 0.04, and the strike price in this case will be equal to $1,700, which is 18% lower than the current market price. But this depends very on the market price and the current volatility on the market. And if you would like to stay up to date, you can join my free Discord channel, where I share the market updates, show all my trades from my public portfolio, and also chat with you. You can join my free Discord channel. And as you can see, every day I'm selling a put option and receive the premium. And as a result, after almost 50 days after I start my first trade in my public portfolio, I collected a premium of $150. And that means if I'm going to sell put option with a strike price of $1,900, and at the expiry date the price of Ethereum will be equal to $1,900 or lower, my average price will be not equal to $1,900 because I collected a huge premium, and this premium will reduce my average price, and as a result my average price will be equal to $1,750. And after I buy Ethereum at the price of $1,750, I will start to sell call options to sell Ethereum at the higher price. And for that, I will receive also the premiums every day or every week or once a month. Depends how the market situation will be. And if you would like to watch the last episode of my public portfolio, you can watch this video. See you in the next time. Happy trading. Bye.